Hello, this is Steve Sadler, CEO of Allegiancy, coming to you from one of our conference rooms here in our corporate offices in Richmond, Virginia, to address some frequently asked questions that we're getting from interested investors all over the country. One of the questions that comes up quite a bit is, what are the projected returns for Allegiancy shares? Projected returns are basically what's going to happen with the company. And our plan, now not guaranteed by any stretch of the imagination, but our plan is to grow assets under management to about $10 billion plus in 5 years. That should be about a 700% growth in revenues and profitability over the next 5 years. It's not unreasonable to think that if the shares are priced at $14 today, that 700% growth would be reflected in share value over that same period. I would encourage you to read the Argus report. An independent analyst firm based on Wall Street has reviewed Allegiancy's business plan, business model, and come up with some information that would probably be very valuable to you. One of the things they concluded was that Allegiancy shares today are worth somewhere in the vicinity of $18.50 a piece, significantly above the $14 IPO offering price. Interest in our IPO has been very strong. We're pleased by that, very excited to have you join us here to get a few questions answered. The most common question is, what is a mini IPO? Briefly, there are a lot of resources at allegiancy.us that will help you understand this, but essentially the Jobs Act created a new avenue for young, growing companies to access capital more cost effectively. That's called Regulation A+, and that's a mini IPO in our case. We're out raising common equity shares for growth capital. Another common question that we get from investors is, tell me a little bit about Allegiancy's business. Quite frankly, Allegiancy is a straightforward operation. We are a fee-based service provider to owners of investment-grade commercial real estate properties. We stand in the owner's shoes and make sure that those real estate assets, office buildings, retail strip malls, industrial, warehouse, etc., that those assets operate cost-effectively, returning cash flow to investors and protecting the asset value, helping those investors grow their wealth. That's what we do, and our technology platform allows us to do that more efficiently, more effectively than virtually anyone else in the business. Question that comes up frequently is, when do you expect your IPO to close? Well, we're looking at a mid to early August closing date, and certainly if you have interest in our IPO, you need to get your subscription documents filled out, get your investment process complete prior to that time. Once we close on the IPO, shares will trade in the open market, freely tradable shares. They'll trade on the OTCQX. That is a electronic exchange, much like NASDAQ is an electronic exchange, where very large companies, reputable companies like Bombardier, Roche Pharmaceuticals, Heineken, a lot of companies of that caliber trade there, and that's where Allegiancy shares will trade. It's important. Many people ask, can I invest through my IRA? The answer is yes. If you have an IRA account, these shares are IRA eligible, the self-directed pension plan, IRA eligible. You can invest with those dollars in the Allegiancy IPO. You'll need your custodian to make that transaction so you don't have adverse tax consequences, but it's easy to do, and we can help guide you through that process. Another question that comes up is, what is our minimum investment requirement? That's 100 shares at $14 a piece or $1,400. Another question that we get quite a bit is, how are you going to use this capital? Allegiancy is a growth company. We expect to deploy 25% of the capital that we raise to build out our technology platform to help create an ever stronger, ever more effective technology platform that drives decision algorithms, predictive analytics, systems automation, making us more and more efficient, more and more effective for our clients. So 25% of the capital is used to build out that technology infrastructure. The remaining 75% will be going to acquisitions and growth as we bring more assets under management. 75% of our capital raised will fund that activity, helping us go from where we are today, just under, $800 million of assets under management, to $10 billion in 5 years. That's it for the moment. Thanks so much.